Hello, Maryland Association of CPAs. Welcome. Thank you all for letting us come and give you a brief history on sales tax changes in 2021. My name is Scott Peterson. I'm VP of Government Relations and U.S. Tax Policy for Avalara. And we look forward to seeing you all in person someday, and we really appreciate the partnership we have with you. Today, we're going to talk a little bit about what we thought was going to happen in 2021 that mostly didn't happen in 2021. The state budgets, we all thought this time last year would be just a disaster. We assumed that the combination of the recession that happened last year and then the business closures that resulted from the pandemic would make state sales and income tax collections radically less than what the states had anticipated. And that was actually true for the first 3 or 4 months. No, not 3 or 4 months. So from March, April, May, and June, in that period of time, so from March through August, there was a significant reduction in sales tax collections and a significant reduction in income tax collections, specifically withholding tax collections. We just all assumed that would go on the rest of the year, and that when state legislatures came back in 2021, the first thing they would do would raise taxes. We just took it for granted. I mean, if you were to look at all the press that Avalara published last fall, you would think that was the only thing that was going to happen come January of 2021. Well, a combination of things made that not happen. Congress and the administration realized that to lessen the impact of a recession, you need to spend money. And this was a lesson they learned in the 2008 recession. One of the things that made that recession longer and deeper than what economists think it should have been is that there was not enough money was spent. So the federal government shut down, states shut down, and the result of everybody shutting down at the same time everybody else was shutting down was to increase the shutdown. And so this time, Congress and the administration said, nope, we're going to pump money into the economy, and let's see how that changes the depth and the breadth and the length of the recession. And it turned out to be the right answer. The extra unemployment benefits that people received last year convinced them to spend money. They continue to spend money. And those businesses that were able to figure out a way of staying open were able to figure out how to deliver their products and services without actually seeing their customers. Many of them found new customers because they all went online. And then, of course, everybody went online. And the result was that those people who were still employed and still had money to spend wanted to spend money. And on top of that, the stock market just had an amazing year last year. So you had the federal government throwing money with both hands at states and people. You had businesses create alternative ways of making sales and finding new customers in many ways. And 3, you had the stock market just have a great year. The 3 of those had the effect of increasing sales tax collections, increasing income tax collections, specifically capital gains tax collections. So at the end of the year, what we all thought would be just the world's greatest budget disaster didn't turn out to be that way. So when 2021 came around, states didn't have a radical need to raise taxes. They didn't have a radical need to broaden their taxes to cover things that weren't currently taxed. People tried. I mean, the governor of Mississippi and the governor of West Virginia both wanted to get rid of their personal corporate income tax and replace it with a broad-based and higher sales tax. That failed. Mostly failed because they could not give a logical and coherent answer on why it was necessary. Big tax changes don't happen. Incremental tax changes happen. Nothing big happens. There were a lot of states that introduced legislation to tax digital advertising. None of them passed. The only state that has a tax on digital advertising remains Maryland. And even though the governor vetoed that last year, the legislature overrode that veto this year. So that law, and they're being sued. So I think the rest of the country said, let's just let Maryland pay for these law cases, and we'll let them figure out whether or not this is constitutional or not. Other than that, we didn't see a lot. Other than in some very specific areas, vaping, every state in the country has decided that vaping and vaping products should be treated exactly the same as tobacco. And so there were lots of states that imposed age requirements to sell vaping products and expanded their tobacco excise taxes to include vaping products. And that we are very close to having the whole country treat vaping exactly like they treat tobacco. Second was cannabis. A number of state legislature and a number of ballot measures in November of last year approved cannabis, both medical and recreational. And there were several states that did one or the other this year by legislation. New York and Virginia, recreational by legislation. It looks like Louisiana is going to do medical by legislation. The result is there are a lot of places where cannabis is legal in some form or another, and it's very highly taxed. States are collecting tax on the sale of cannabis that they never imagined they would collect. And so you have, then the next thing that happened was the last 3 states adopted the Wayfair style economic nexus statute. We've had 3 states that have been, I don't want to call them holdouts, but in some ways they've been holdouts. Kansas, Missouri, and Florida. They were the last 3 states that had no law whatsoever, other than Kansas regulation, which only applied to remote sellers, didn't apply to marketplaces. All 3 of those state legislatures have adopted legislation that would make remote sellers collect the state sales tax, and to make marketplaces collect the state sales tax on the sales they facilitate of other people's products. The Kansas law goes into effect on July 1, $100,000 in sales, no transaction component. Florida's law goes into effect on July 1, $100,000 in sales, no, plus a 200 separate transaction component. Missouri's law doesn't go into effect until January 1 of 2023. There's a reason why that is. It's going to take a while for the state to be ready. Missouri is unique for a couple different reasons. One, there's 2,200 sales tax jurisdictions in Missouri, the most of any state in the United States. They overlap. They do multiple purposes. It's a crazy patchwork of taxing jurisdictions. It's a sales tax in almost every case. It's not a use tax. And Missouri law is very clear. If you're an out-of-state retailer and you have no physical presence in Missouri, if you're collecting a tax in Missouri, you're collecting the seller's use tax. So without the local use tax, there was no local tax for anybody outside the state to collect. And the legislature has been trying for years to figure out how to get out-of-state retailers to collect their tax and the state tax and the local tax at the same time. And it's been a very difficult thing, excuse me, to accomplish. So what they did, instead of just saying, boom, retailers left start collecting state and local tax like they did in Iowa, what they've done is give the local governments an 18-month lead time to enact local use taxes. And in Missouri, that has to be done with an election. So between now and from the end of June of 2020 to the end of December 2022, there are going to be a lot of local elections in Missouri. And the topic on that ballot is going to be, should we have a seller's use tax? It's very likely some of them will fail. And it's going to be quite the mess keeping track of all of those changes, because if you have somebody, if you have a client or you yourself are collecting tax in Missouri, but you're not collecting every local tax, you need to keep track of all these elections to know when you need to start collecting that tax. At the same time that Florida adopted their remote seller and marketplace collection requirement law, they adopted a new sales tax holiday. Florida, sales tax holidays are not new in Florida. They've had them for a long time. They've had a hurricane preparedness holiday for a long time, and rightly so. This year, they decided they were going to have a freedom sales tax holiday, and that's what it's called. A freedom sales tax holiday is something you all need to pay very careful attention to. If you or your clients sell outdoor recreation equipment into Florida. Remember, July 1 economic nexus goes into effect. So if they have more than 200 transactions or more than $100,000 in sales in Florida, they need to start collecting sales tax. But at the same time, the very day that law goes into effect, the holiday goes into effect. And the holiday exempts a portion of the sales price for a long list of recreational equipment. And the legislature was very clear, very specific in the list of things that are exempt from the sales tax. And the amount that's exempt varies by product. For example, the first $25 of the sales price of goggles, snorkels, and swimming masks are exempt. The first $200 of the sale price of tents. The first $30 of the sales price of tackle bags or tackle boxes. And there's a long list of these, and they're very clear and they're very specific. And the dollar amount that's exempt differs by product, by product, by product, by product. The most complicated sales tax holiday in the history of sales tax holidays. Otherwise, the Kansas and the Missouri laws are pretty static. Kansas looks actually quite boring compared to what they did in Florida. We expect auditors to start going back to work. And when they go back to work, they're going to go back to the tried and true. And the tried and true for them is use tax. So when you or your clients get audited, you should expect that auditor to say, I'd like to see all your purchase invoices for the last 3 years. And look for people that didn't charge you sales tax and assess you the tax. Now, for good or for bad, we all have a defense today that we didn't have before the Wayfair decision. The Wayfair decision gives states the right to force out-of-state retailers to collect the sales tax. So if you or your clients are, one of your clients gets audited or you've been audited, and the auditor says, I'm going to assess you a use tax on the things that you purchased that you weren't charged sales tax on, you need to ask the auditor whether or not he or she has looked to see whether or not that person should have been collecting the sales tax. In a lot of states, the priority in law is on collecting the tax, the sales tax, and not remitting the use tax. So if a seller is legally required to collect the sales tax and didn't, that should be your defense. And I would make that every argument, every time I get audited, I would say, oh, wait a minute, I get it, I owe the tax, but so does the person that I bought those things from. You need to prove whether or not they had a legal requirement to collect the tax. And if they didn't, that's fine, then I'll pay the use tax. But first, you need to figure out whether or not they should have been collecting sales tax. Let's see, what else? Like I said, I expected a lot of states to do services. I didn't see hardly any of that this year, very little. Digital services, I expected everybody to continue to expand the sales tax on digital goods. Saw none of that, except for Colorado. Colorado is the only state that's going to do that. Otherwise, digital advertising was a thing that states focused on, and that's, for the most part, didn't go anywhere. Streamlined sales tax. Now, you got clients that are having to collect sales tax everywhere today because of the Wayfair decisions. You need to check out the streamlined sales tax and the other thing that goes on, and the thing that they're doing in Pennsylvania. Those two things together give you 25 states where the state will pay the cost of compliance. So if you're not looking at that, you need to look at that, because they're set up. They have this thing called certified service providers. Avalara is one of them, but we have competitors that the state contracts with, and the state pays us to provide this service to you or your clients. You need to look into that. You could save your clients a lot of money if they meet the requirements. So thank you all very much. I wish you all the best, and I hope you have a great conference. And we look forward to seeing you in person as soon as that is physically possible. Thank you very much.